So there might actually be a structural liquidity infusion outside of what the Fed does with rates that no one's really thinking about right now. So they are trying to become the AI layer for the US government. And that's a very lucrative play. I think one of the reasons they're doing this is because it allows the banks to leverage up a little bit more so they can be a marginal buyer of treasuries and infuse more liquidity into the treasury market, keeping yields low. But that has another effect of introducing more stimulus and more liquidity into the market. So there might actually be a structural liquidity infusion outside of what the Fed does with rates that no one's really thinking about.
Hey, what's up, everyone? Welcome back to another episode of Trading Takes, presented to you by Investors Underground with me, Sam. And tonight we've got another fantastic guest, a returning fan favorite. Stephen Place is well known, and in this episode, Stephen goes through why Palantir became this summer's momentum darling, how options flow can dictate price action, and the lessons he learned from both nailing reversion trades and leaving money on the table. He also shares where he sees real opportunity right now, from small caps poised to run on Fed cuts to big banks benefiting from shifting capital requirements, and even the next wave of AI-driven plays beyond semiconductors. Now, this is an episode you will want to pause, rewind, take notes, and probably ask questions as well. Now, let's get stuck in. Please welcome back Steve Place. How are you doing?
What's going on, my friend? How are you?
I'm great, thanks. Are you in Hawaii at the moment, or is it just a lovely summer's day where you are?
Florida. This is my lucky Florida man T-shirt. You ever seen the Goonies?
I have a long.
You know the truffle shuffle? I don't know if you can see him. There's a truffle shuffle.
Oh, yeah. I mean, that's quite fitting for Florida, I'd imagine. Obviously, it's the Sunshine State, so
yes,
very fitting.
Yeah.
So, I mean, I think a lot, like, you've been on Trading Takes before, you've been on Sunday Scan, you've done tons of stuff with Investors Underground, and obviously we appreciate all of that. Then, just in case there's the odd one or two watching for the first time, perhaps just bring them up to speed just a little bit about yourself.
So I originally was a cell phone hacker at a defense contractor back in 2007. And then during the great financial crisis, I left my full-time job and went to go trade full-time and write about the markets. And that's what I've been doing since. So that's where I've been. And I'm a 15-year overnight success. Yeah. And I'm just really glad to be here.
And obviously clearly very good at both of those as well, to be doing it 15 years. And I think, like, one of the main things that I really want to get into tonight is, I know you focus a lot on momentum, and I think I'm always reminded of Lance always talks about, like, those big ops. And I think this week, one of the biggest ops, and certainly one that really stands out, so we're recording this on the 21st of August. The op that stands out to me is PLTR. Now, I know you've traded this very well recently. What is it about that move and the recent moves in the market that really stood out to you?
So the Palantir, first off, like, I don't, like, I understand their company, but I've never actually done a deep dive into what their offerings are. I just know that they are trying to become the AI layer for the US government. Right? And that's a very lucrative play. But what I noticed, and this was pre-earnings, all right, and this is me, like, having a light opinion where it's like, does this actually pass the sniff test? If you look at the market cap of Palantir, if you look at the valuation, it's much larger than the prime contractors. So if you don't know what a prime contractor is, it's the big kahunas with the Department of Defense. So Lockheed, Northrop, L3 Harris, which I used to work at, and Raytheon. And there's General Dynamics you could probably throw in there too. And Palantir is trading at a much larger valuation than all of those. So my question is, does this pass the sniff test? And I understand that, like, when you're building planes and when you're building boats, the margins are going to be different versus Palantir, which is going to have much larger margins. But I started to get a little bit skeptical. with this most recent run. And it has been extended, right? And it's been extended for a while, but just because you have a slightly bearish thesis does not give you a reason to take it short. So the stock had that earnings event, and they were good earnings, and they certainly seem like they are justifying their valuation. But we are in a wag the dog kind of market where option flows often dictate the move in the underlying stock. And Palantir was the momentum darling this summer. And you had a lot of crowded trades, not just retail, but institutional trades, buying a bunch of call options. Everyone's super excited about it. From April, it jammed up from 70 all the way up to $190 a share. Okay, so this is one of those where the collision between options, liquidity, demand, and the narrative come into play. So you get through earnings. Earnings are good. Earnings are great. The stock runs on earnings, but if you're going to be kind of a speculative call option buyer looking for that extra kick to the upside, what additional juice are you going to squeeze out of the narrative? Okay, so it's one of those where if there wasn't an additional justification for a bunch of people to go out and buy a bunch of call options, then the dealers on the other side aren't going to continue to hedge their short calls with long stock. All right, so we started to see that wane a little bit. There was you could view it as a double top or some kind of a failed breakout, which you could justify. But the kicker for me was when Trump went to Alaska. And the idea for me was that if the Trump administration can get some kind of a détente in the Russo-Ukrainian war, it's probably going to lead to a lack of enthusiasm for defense companies. And it doesn't have to be true. You just need a whisper of that news, and all of a sudden people don't want to buy call options, and then that structural liquidity bid that you saw in the stock goes away, and then all of a sudden it's a very crowded trade, and then you get that unwind. So that was the overall thesis for me. And I understand, this is not something that's easily back testable. This is a very squishy idea, but that's one of those things where if you can understand how the narrative affects the options market, which bleeds into the underlying stock, you can get an additional edge there.
Mm-hmm. That's super interesting. And I think as well, there's a couple of things to sort of dive in there on it as well. So I think what's interesting as well is that it's for technical, it's like having that technical aspect of it as well. Also that fundamental thesis as well. Like you've got that two-pronged thesis there, which really has helped build your case. I'm interested though to know, you've obviously touched on perhaps the exhaustion in call buying. Does that tend to be more obvious than perhaps what we see on the common, or are they both very similar?
So if you look at option, or if you look at stock volume, right, that's going to be, for me, it's a little bit noisy because you can look at net delta and things like that to see if people are buying on the ask or selling on the bid and so on. But with names like Palantir, if you see a bunch of big block call options that continue to hit the offer and there's a bunch of option buying, and all of a sudden you're just not seeing that as much anymore, then that can help to get that push to the downside. There's one additional point with this, and it's actually surrounding earnings that, and I'm not sure if this is the case. This may be a little back curve fitty for me. But when you have an earnings event, you will often see, 99% of the time, implied volatility in the options market will start to go up, right? And then after the earnings event, the option premium starts to get pulled out. But not just the premium, the directional exposure on the entire options board starts to shift. Because as the implied volatility goes down, the delta, the directional exposure on all of these options, starts to change a little bit. Okay, and then the dealers who have all of this inventory if they end up a little bit more net long than they want to, they start offloading shares, and that can it's not the thing that's going to accelerate the selling. It's the thing that's going to stop the rally. Okay, so Palantir, I've talked about gamma squeezes and Vanna unwinds and things like that. I don't think Palantir was anything like that. I think this was just a normal momentum breakdown that was, catalyzed by a potential headline plus some option unwind stuff. Right. So hopefully that makes sense. Like you can kind of see it reflected in the options market and look at the option volume. And if we're not seeing a lot of large call option blocks being bought anymore, that can be a signal, but it's not necessarily the bearish signal on its own. That unwind was nasty, and then it actually accelerated in the aftermarket session, and then we saw that final capitulation to the downside. So I think that Palantir is probably going to be range bound for a while. I'm not sure that the selling that we saw on Wednesday, where it truncated, my guess is that there are large players, institutions and funds and things like that, who said, oh, thank God we finally get a chance to get some exposure in Palantir. And they're not necessarily buying stock, but if they're selling puts, right? Or maybe they're buying a few calls, that puts a floor in the stock. I do have, I don't know if you can see this very well, but I do have this Fibonacci sequence or Fibonacci retracements on it. The 0.618 retracement was almost to the tick at the low, which is probably an artifact. It's not the thing that drove it, but it was a pretty good reference point as well.
And in terms of, that's fascinating. And in terms of the actual, so obviously you've got this very sound thesis, but in terms of actually executing this trade, how did you actually go about, how did you approach it?
For me, at any time I get a thesis like this, I'm always going to be a weenie about it, especially if I go public with it. So obviously the trade is just to load up on a bunch of weekly puts. Put spreads did well, but they're not going to be the thing that actually gets that extra kicker to the downside. So I'm still kind of pissed about it. Lesson learned again, but it was one of those where, I was probably a little bit early to the fade. And then I just thought, okay, I'm not going to be super aggressive because it's been a really strong market. It's been really tough to try and fade stocks. So I thought, okay, just put spreads and just call it a day and just hold it for a swing. And I should have just, bought a bunch of out of the money puts and made a lot of money, but I didn't again.
Next time.
Yeah.
Yeah, you could join the club there.
It's a very large club.
It's a very large club. It's a large club actually, but still very lonely, despite being such a large club. And just to touch on, you touched on the capitulation. Like I thought that was again, like that was what, 2 days ago, the 19th, I think, from memory.
Yeah.
I think again, huge opportunity again, and does that? You've touched on, obviously mentioned Fibonacci, but also equally we've had a move from 100 and what is it in the 190s all the way down to the 140s in a very short space of time. We have sped up to the downside. Again, is that best captured in? Again, do you see that those signs perhaps there might be a reversal coming through options again, or is that just purely you just looking at this chart here?
I probably would not have been able to call this bottom. Like I wasn't attempting to. In hindsight, it's the classic Lance right side of the V setup that we're seeing now. That kind of capitulation that hit. So yeah, you could make the case, and it's, you could probably run some kind of a scan where it's like some of these momentum names, they've once they get that correction plus that acceleration, that 1 or 2 day really hard sell off, that tends to be a good spot to take it long. The counter to that would be, if you look at the last time it had a good reset was February 2025, and it had that really ugly sell-off day, and then a gap down, and then an overtake of that earnings low right there. I'm going to try and mark it. And that was good for a day, and then it accelerated to the downside on a second gap lower before it bottomed out. So, in terms of, is this most recent sell-off the bottom for Palantir? You just don't know. That's not knowable information just yet.
Yeah, and I think obviously you mentioned Lance and you mentioned the right side of the V. I know he nailed it. Nate nailed it in IU as well. But I think it's very much like you said, that purely momentum trade, as opposed to this is our exposure to Palantir for the foreseeable future. I do think that, again, that goes into the realms of, for me anyway, at least, very unpredictable. I still remember people talking about Palantir when I was in the 20s being dramatically overvalued. So it's difficult to look at it even still in the 160s and think, oh, okay, this is fair. This is fair market value.
Yeah. And so I don't think in terms of valuation like that with the market. I think in terms of it's in the back of my head, but I'm also thinking in terms of positioning. And, if you didn't buy after that most recent earnings event, you're still doing okay, right? And if you bought at any point in time over the past, year to date, you're still in the green and you're still feeling okay. So it's not that we're seeing broad-based fear from every single investor as this whole thing gets killed. It's that we had a very crowded momentum trade where the enthusiasm just started to wane, and a small narrative catalyst to get it going. And you might have larger players that get their ears pricked up and saying, okay, is this going to be a bigger risk? But the base case for me is just, it's probably going to be a very good range trader, probably until the end of the year. I don't think the highs are going to get taken out anytime soon. I don't think it's going to get absolutely murdered and we're going back $100. It's just, if you enjoy playing reversion and you like playing support and resistance, you can probably earn a very good income punishing the traders that are trying to get that either a big crash or a retake of the highs soon. All right. So that reversion trade, I think, is going to work really well.
Yeah, and I think, again, not to mention Nate again, that's something that he would do. It does extremely well, just capture that range. I'm just interested as well. We've touched on the nuances of this setup. Now, obviously, I understand the nuances are going to vary from name to perhaps some other names that get grossly extended. But in your mind, was this quite fairly textbook, or was there something very unique about Palantir?
I think it was right after a really good earnings event, and you could easily make the case for some kind of post-earnings announcement drift trade. And we didn't get that one last gasp parabolic move. This is a terrible analogy, but Tilray, if you remember when Tilray went apeshit to $300, you had that one last blowout candle. It never really hit in Palantir. So it was more of a waning of enthusiasm versus something where everyone's trying to jam this stock higher and then it completely falls apart. So it was a different flavor. I was actually quite surprised at how hard the stock sold off over that 2-day window, because it didn't feel like there was enough. It didn't feel like there were enough participants who were really stuck on this trade to jam it lower. So my thesis is that with some of these names, if you end up where the speculators aren't touching call options anymore, they're like, oh, it just broke, whatever, it broke the earnings low. I'll wait for it to retake and then I'll buy some more calls. If that demand in call options goes away, then there's some nasty unwinds that can hit right after that. So I think that would be kind of the flavor I would be looking at for a name like this.
No, that makes great sense. And in terms of like the lessons that our viewers can learn from this, what do you think sort of the main takeaways are? I think one that springs to mind is every time we're all pleasantly surprised about the range, and we think things go further than you expect, but then they can also tumble further than you can expect as well. I think there's always an element of surprise there.
Yeah, it's just because I am a reversionist by nature. Like that's just how I think. So, um, uh, allow the possibility for some of these momentum unwind trades to really work.
Yeah.
If you want to think in terms of expectancy, me buying put spreads is not going to help my expectancy versus buying a bunch of puts straight up because money was left on the table, which affects the system over the long term. So,
Yeah.
if you're going to try and take some of these short, you probably don't want to scalp it for $1, right? You want to see if you can find a way to really identify that downside acceleration and just hold on for dear life. There's some things you can do with options. You can roll, you can do some other things to keep your position on. But yeah, that's the lesson I'm getting out of it again, where it's like, okay, if you're going to swing, actually swing, don't try and bunt.
Yeah. And I think as well, like, I always wonder as well, like it really depends, I think, where you're at within your trading in terms of that mini cycle, in terms of are you all-time highs, are you just off, have you been beat up a little bit on the front side on it? Because I always think that can really, mentally impact actually how, bit patient or whatever you're willing to be. Because sometimes you just think, actually, if I cover here or whatever, I can suddenly make back those L's on the front side. And I think it's so difficult. And I got a lot of respect for anyone who's able just to think extremely clearly and logically and just think, actually, this has just got a lot of room to the downside, which always impresses me for sure.
Yeah. Yeah.
It's such a good example. And thank you for sharing. And it is great as well. Like, anyone can follow along with your commentary. Like, you're quite vocal, on social media, about this. So, I appreciate it. Moving on to your market thoughts then at the moment. I think just back to the Palantir example, actually, I think what was funny as well was when Kramer came out with the old classic 200 tweet or something that also marked the top for this. But how would you describe the current state of the market?
All right. I'm going to let her rip for a second.
Let it rip. Go. Let's go.
One good, just simple short-term trend following indicator to have is the 8-13 exponential moving average cross. All right. So when the 8 is above the 13, we're in a bullish formation. When we're below, it's in a bearish formation. What I was looking at recently was that the stretch of time that we've had where the 8 was above the 13 was at 82 days. All right. So that's 4 months in calendar months. And there, I went back and looked, like the parabolic top in August 2020 was the last instance we had that. Before that, it was the February 2020 top. We all know how that went. Before that, it was Dece 2019. And before that, it was all the way back at 2006. So really small sample size, but just kind of gives you the idea of how rare this kind of market has been. And it is due to a few things. First off, concentration risk. And sometimes concentration risk is actually concentration reward. Because everyone complains, myself included, that, like the NASDAQ 100, 60% of all the weighting is in 7 stocks in the Mag 7. All right. But that was actually a benefit. So we had the tariff tantrum. Right. And for the past 4 months, institutions have made sure that they weren't going to look like idiots. Right? Because we're all looking for the headline. We're all looking for the rollover. We're all looking for the tit for tat from China or whatever it was. And we had a market where the demand for hedging, as evidenced by the VIX and VXN, which is the VIX for the NASDAQ, has traded at a huge premium relative to the actual volatility in the market. All right. Boy, I hope all that makes sense. Because what happens is that if you have enough people hedging to the downside and those hedges continue to burn off, it creates a structural bid in the markets. And so that's why all the dips were so shallow, because anytime you had that dip, some mechanics would happen in the options market and it would just rotate back up. Okay, so we have had for the past 4 months implied volatility at a much larger premium relative to actual volatility. The past 3 days, and then you include that liquidity break from about 3 weeks ago or 2 weeks ago now, those are the starting signs saying, you know what, volatility might be picking up a little bit, and that trade is kind of not working as well. But, as it stands, what's VXN at? VXN is currently at 20.5. Okay. And what we can do really quick is we can take a look at the historical volatility. So that's just what's happened recently. And for the NASDAQ, we're at 1650. Okay. So that's a 4-point premium. That's not super wide, but it's still wide enough. And then you think about there's some other stuff with VIX futures that there's contango and rolls and all these other things that just have kept a bid on the markets. Okay. And couple that with the fact that we still have, if you're a fund and you bailed at the tariff tantrum and you're saying, oh no, I got to get back in, but I don't want to look like an idiot. What do? I go buy calls, right? And so you have something where the hedging to the downside has kept a pretty good premium in equity options. And then you still have those extra calls where it's like, I just want to get some exposure. I just want to get some leverage. I'm not going to dedicate 20% of my fund. I'm just going to do 3% in some call options. And that has kept a structural bid in the market. It has been a wag the dog market where option flows have dictated how the market's going to trade. Okay. So the big question for me is, are we going to get a point where either we get some kind of volatility catalyst that actually blows out to the downside, or are investors and hedgers going to get complacent enough where we actually see implied volatility drop down to a point where it can't cause that roll up anymore? All right, so that's the thing I'm a little bit concerned about. But I also think that we have a peak narrative in this market where everyone and their mother is obsessed about the Fed and how they're going to cut in September. And I think that there's going to be something that comes out of left field that will matter more than the Fed rate decision in September, because everyone knows that's coming. Yeah. Everyone knows it's going to be a quarter, right? It's probably not going to be a half. It's going to be a quarter. And then, maybe after that, something else happens. Right. And one of my theories, I wrote about this, I think it was on Sunday, where it's like, well, the Russian detente could cause Palantir and the momentum unwind. So that was one of the theories, and it did play out. So I've got a few. This is now a variety show.
Oh, I love it.
It's like top 10 terrible ideas to look at.
Number 10.
So if you look at small caps, and if you look at the Russell, like we've seen a decent pullback in the markets, but it depends on what market you're looking at. If you're a momentum investor, you were loaded up with Palantir and whatever momentum darlings were out there, this week felt awful. If you looked at banks and industrials and small caps, it's fine. Like this is not unhealthy action. This is a pullback. We haven't even breached the swing A VWAP from that capitulatory low from earlier in August. All right. So if you look at a lot of smaller cap names and you actually do fundamental research and you look at the debt exposure that they have, oftentimes it is indexed to the SOFR, the secured overnight financing rate. Okay. So these companies have been bleeding cash because they have had to finance their debt at much, much higher rates, and they didn't hedge their duration very well. If the Fed cuts, and if the Fed, because I actually think deflation risk is actually much, much higher than what people think. then those small cap companies are going to have cash that they were using to finance their debt, and they can then use that for other stuff.
Yeah.
All right. So that's an example. I wouldn't be shocked if small caps rallied into the rate cut and it becomes kind of a buy the rumor, sell the news event. Another one. Where's my list?
Number 9.
Okay, there's some plumbing that's changing with tier 1 banks. The ESLR, the effective supplemental leverage ratio. And this is usually reserved for grumpy macro traders that, are better at talking macro than trading, but I'll talk about it a little bit. There is a capital requirement for these banks to hang on to as reserves. All right, that's the basic idea. And the Fed and the comptroller and one other federal organization said, you know what, we should loosen those rules. And so the commenting period is ending either, it's like at the end of this week or sometime soon. And then probably at the end of the year, they're going to officially remove those or lower those reserve requirements. Now, if you look at banks, especially big banks, and you can look at XLF, that's a pretty solid looking compression breakout. And I think one of the reasons they're doing this is because it allows the banks to leverage up a little bit more so they can be a marginal buyer of treasuries and infuse more liquidity into the treasury market, keeping yields low. But that has another effect of introducing more stimulus and more liquidity into the market. All right. So there might actually be a structural liquidity infusion outside of what the Fed does with rates that no one's really thinking about right now. So I think big banks might actually be a decent play. So we've got that one. And then there's the usual, I know pot stocks are running. I really don't care about pot stocks, but solar trades are starting to hit. And there's other pockets of momentum if you just stop staring at Palantir's chart. Right. And there are names that, they've been momentum darlings in the past, but maybe they've gone sideways for months. Those are probably going to be easier swings than trying to get the next push in Robinhood. All right. So it just take a step back, look at the stuff that broke out on earnings this quarter and see if it's holding. Look for names that have had good moves in the past. I'll give you 2 ideas right now. First up is Tempest. This sucker can't break above 75 to save its life, but it's been like that for over, this is coming up on 1 year. All right. So this is a healthcare AI stock. I think applied AI is probably going to be the next AI move because it's not semiconductors anymore. You could make the case for solar and power being an AI play, but you also have the software layers that are starting to realize value. So Tempest is one of them. I think Unity could have a Roblox-like move because they just released their AI software platform, and this stock had a really nice push back in July, and it's been kind of an ugly chart, but it is continuing to hold. We continue to see solid option flows in it, and this could be a $50 stock before you know it. So I think you just, everyone's still in the rearview mirror. Everyone's thinking about the Fed. Everyone's thinking about the momentum darling du jour, or I don't know what month is in French, du month or something. And there's, if you're looking for rotation like I am, what are we going to rotate into? And industrials, solar, big banks all look really good right now. And I'm very sympathetic to a bearish case in the NASDAQ, but it's still a really hard case to make. Okay.
Yeah, that's again super interesting. And in terms of those examples, obviously small caps, banking, applied AI, just to touch on what comes first for you. Obviously, I know it with your chosen career path, you're as much like a writer and I don't want to say we'll use the words journalist as such, but you're writing as well as and coming up with your thought creation as well as trading. what has come first? Like, are you looking at those charts first, or are you thinking, actually, this story makes sense to me? It makes sense that actually, if they're going to cut rates, small caps are going to run. Okay, I'll look at the Russell. Or is that like a process in reverse for you?
I am looking at price first. I am looking at scans as a function of liquidity. So what's breaking out? What's having a 10% move on the week? Like if you just did that, if you just looked at anything above a mid cap stock that went up 10% on the week, and you just looked at those names, you take their company profile, you throw it into AI, and you say, what do they all have in common? That's going to do a lot of alpha. I look at insider flows, and insider flows tend to be about 9 months early. So I can get a hold of these narratives. And what I've found is that if I go narrative first, I'm about 6 to 18 months early on that stuff. Like I've been bullish on the solar trade for a year now, which means I've been wrong, right? Because we're now just lifting.
Mm-hmm.
So price has primacy, but if you think about the things that affect price, liquidity, catalyst, narrative, positioning, all of those matter as well. But the first thing is going to be like, okay, what's moving, what's seeing liquidity infusions, what's getting killed, and then I can go back and extrapolate some of those narratives from there.
Yeah, that makes so much sense. And
so let me give you an example. Like the banks. So we had a sell off in the Nasdaq, and I'm like, okay, what's holding up right now? Because it doesn't feel that bad. And I saw industrials and banks, and I'm like, what's going on with banks? And then I remembered that ESLR thing from like 3 months ago when it got announced. And that's how I kind of bridge that narrative. It's like, okay, they're holding their bid for a reason, and this may be the reason that no one's actually looking at right now.
Yeah, and I always find it funny that like that could well be the reason. It could well not be the reason why they're holding up, but that's what's funny. It doesn't actually matter. It makes sense, so it obviously could well be true. But like you said, price pays. So I mean, past that, I mean, it's not a case of who really cares, but it's a case of actually if you can make sense of it and it can help you with some sort of conviction in that trade, whether it's actually the reason or not, I don't know. It doesn't necessarily
it's
matter.
Close enough.
Yeah, it's close enough. Yeah.
And what'll happen, reflexivity is a thing, right? And people think about price and narrative reflexivity, and sometimes, many times, price drives the narrative.
Yeah.
Where something will happen, and then financial media and everyone else will start to say, well, why did that happen? And then they dig and dig and dig, and then they say, oh, this is obviously the reason. Now, you didn't exactly know that back then, but it's close enough, because I'm not getting I'm not getting paid in headlines. I'm getting paid in dollars.
Yeah, absolutely. I mean, this is super fascinating. And I think like you can really, like, I with all my guests as well, like the passion that comes across, and I think as well, like I could just tell how much you dived into each of these topics. And I always think, like, for me, that's always one of like the biggest lessons, is just how empowered you are by everything that you do on a day-to-day basis. Because like, it's not easy to just bring out a list like that and think these are lots of ideas, but that's what it takes. And I mean, it sounds like you're doing this nearly every minute of every day when you're not obviously with your kid, of course, or chilling out in a lovely shirt like that.
Well, if my brain stops thinking, I get depressed. So, I already have focus issues as it is. And the market is an incredibly fascinating, dynamic place where there's just something cool every week. And, aside from the speculation, that's the fun part for me. Obviously, I'd like to speculate more. But that is a good lesson. You just got to really like this stuff. Don't just, as an aside, quick disclaimer, don't speculate on markets based off of a narrative. Like, you're looking for price action to confirm that narrative, and then you let her rip. All right. But it's good to, if you can just have like a OneNote or a Notion or an Obsidian file with all the narratives that you think work, and you can do a lot of good stuff with AI now with this. And then you try and say, okay, what stocks will align with this narrative? And then you build a watch list like that. And then you just run scans off that watch list. Then you've got a really good, I don't know the word for this, center of knowledge to start with. So you can actually have a little bit more confidence in your trades.
Yeah. And I just think that's so powerful. And like you said as well, like sometimes you said the narrative is a few months before, but actually if that trade then makes sense to you and you see that price action, it's like I said, I only see it as empowering, and I only see it as a really beneficial tool. And it's just interesting that whilst you can reel off and you've got like, there's some absolutely fantastic, and I'm sure there are some narratives already in your mind that are building that might not come into play for 6 months, but it's also just being able to bang, this is the price action I wanted to see, and this is how I'm going to act. I just think I genuinely think it's really remarkable. So it sounds intense. It sounds like it would be intense being in your head as well. But
That's pretty awful.
I'm not sure whether to laugh or cry at that.
Look, I got a home office. My wife's, around every once in a while. She just subs when she wants to and does turtle rescue. But every once in a while I come out of my room and I just knife hands her. I'm like, let me tell you about the SOFR, and I just start going. And then that's my like blow off valve, because I can't do anything about it. I'm just like, here's something really cool. And that's half the reason I write, so I can just get this out of my head. And look, if you're seeing something move and then you're trying to research why it moved, try and do that research beforehand and try and just get your feelers out first. That way, it's an efficiency thing too, because you want to be focused on the operations, not the research when you're actually in the trade.
Yeah, no, and that's what I was kind of sort of alluding to as well, that like, if you've done that research before and then you start seeing that price action, and like I said, I think that confluence has just always helped. And it's like Lance always says, and when I spoke to Lance for Trading Takes as well, he said like the biggest issue that a lot of people have is that they do have fantastic ideas. A lot of people do have fantastic trade ideas. It's just, how do they actually, like, what does the execution actually look like? And it could be like, oh, I want to go long banks, say, or a bank, JPM, whatever it is. But it's actually a case of, well, that's a great idea, but what happens when it pulls back? What's your risk, etc.? And it's actually applying that to make a trade out of it, and that's where like entry signals or exit, everything can come into play. And I just think it's such an absolutely powerful lesson. I've absolutely, you are an absolute fan. It's absolutely fascinating, everything you had to say. So much of it went over my head, so it might have gone over some of our audience's head. We'll definitely, there's definitely some amazingly complex ideas and notions there that I think everyone will enjoy. I'm sure. All I would say is, like, anyone watching, any questions, like just hit the comment section below, because this is like also Chris's forte as well, and Chris is always in the YouTube comment section. So hit those questions. And Steve, any closing comments or remarks?
Well, don't forget to like, comment, and subscribe. You got to see, because this is going on YouTube.
You're the man. Yes.
Yeah, there we go. If you want to read my hot takes, convexspaces.com is my Substack that I've actually just done a soft launch with. And so it's about 2 weeks of like actual regular publishing. And I do send out trade alerts through that. They're anticipatory trade alerts where it's like, I'm not telling you to buy right now. This is all of your prep and what I think the best option strategies are, or if it's just an investment, we can look at that too. So yeah.
And your ex as well?
Stephen Place.
I know you like doing your lunch break vids and stuff, and that's super cool as well. So thank you so much. It's been an absolute pleasure. Listen to the man and make sure you do like and subscribe. I always forget to say that, so it's great to have a reminder. Thank you so much. Truly fascinating. And yeah, thank you everyone for watching. Peace. We'll see you soon. Thanks again. Thank you for tuning in to this latest episode of Trading Takes. Don't forget to hit the like and the subscribe button. And if you enjoyed this conversation, please check out some of others with some great traders. Thank you for watching.